Hey, what's going on, folks? This is Dimitri back again. In this video, we're going to discuss why people want to invest, or why should they invest, or why you have to invest. Why? And I'm saying have to is because you got to do it. Otherwise, you're going to be not even left behind, but actually left behind in terms of how much money or how it is worth, how much money your money is worth. I know it's a little bit chaotic, but we saving or why saving just not enough anymore in this country, or just in the general economic society in general. You go any country really, at this point is pretty much any country really, or maybe for North Korea and China, maybe those, well, that depends. But in any case, why in this economic environment, why saving is not enough just because you just putting money in your savings account, your account, or whatever, under the mattress, or like in a piggy bank or whatever. Like some countries, some cultures do under the mattress, used to be anyway. But we're gonna answer that question right here, right now, and let's go into it. So, and that's actually obviously gonna be very, very impactful for your money as well. So what, I got my iPad, so let's go right into it. I got a couple of topics that I want to discuss, and first of all is power of compound interest. This is the most important and one of the amazing topics that can be possibly created. I think Albert Einstein said it's one of the powerful thing that can happen in the lifetime of the human history and things like that, or like just in terms of like the effects of compound interest is amazing, especially like in the money perspective. So I actually did a quick calculation before I did posting this video. So in investing.gov, like I went to it's actually popped up pretty interesting on the US government website. It provided the information, just simple information you put in. You could do like compound calculator or whatever, do that online on the Google. Just I Google it, like first link it came up, investing.gov, and I didn't even know there was a thing. But anyway, so it was legitimate enough that I put it like few percentages, and I put in like $5,000. Like I start with $5,000, and I invest every month for like during 5 years. So 5 years, starting with $5,000, every month $2,000, and well, at least $2,000. Well, let's say like 1,000. Well, 2,000. I just calculated for 2,000, and over 5 years, you will have. And then if there's variation, 10% or less or no, and like with the deviation and stuff, you will have in the range of, in 5 years, you will have a range of either $130,000 or $125,000 in the pot, or in that investment account, or $150,000, guys. This is amazing. So, and it's just 5 years. 5 years, that's it, 5 years. So, and it's not like a selling or anything, but it just give you a perspective of how compound interest is so powerful, in the sense that like, hey, this is over time, this is cooking, this is doing its thing. So one of the key features that you gotta understand, that when you invest, when you do actually investing, you're not just saving money, not just putting in a piggy bank, that will, like, you will actually lose money overall. So, and I will tell you just in a second why. When people invest money, and it's cooking basically, it's doing its thing, it's in the company somewhere, or it's in the real estate, so I do real estate in some point on the side thing. But a power of compound interest is very, very powerful. So that's one of the reasons, or first reason, that you can and should consider investing, why you should consider investing. So beating inflation, so that's the second topic, and why I wanted to discuss here, man. And I just said you will lose, when you lose money just by keeping it, just by putting it like in the piggy bank or whatever, you will lose it. Why? Because every single year, and I would say like every single month, right now, like their websites that they're posting it right now. Well, not right, but overall, they're posting it every single year, every single month, the rate of inflation. I know it's some topic out there that some people just were like, oh yeah, it's inflation. Oh, it's inflation. It's such a common word nowadays. It's like, oh, you know what? I'll go get a bread or whatever. So it's such a common word right now. They're like, oh yeah, it's inflation, bro. But it's a very, very interesting tool, if you will, or interesting phenomena right now, where economies of the world, they basically folks like created, or it's still like it's got established. I don't know like ins and outs, unfortunately, but since it's there, you gotta like, hey, we gotta work around it somehow, like personal level, like all the way there on the personal level. Hey, well, we got inflation going on, so how can I protect myself, right, against it? So let's say, here's the example, like, all right, so how it affects me, like as an example, like, and why you should invest. It's one thing. So let's say I put the same $5,000 in the bank account for whatever reason, and there's no compound or no interest rate, no nothing, like, you know, there's just no nothing, no percentages even coming to your way. So that way, that in that assumption, it just lays there. So $5,000 a year from now, or 5 years from now, overall, over a year in, year out, 1 year over a year, and things like that. So just 1 year beyond that, it will lose. And that's just the general perspective, like as far as I lived in the United States for a few years now. Yeah, 3%, well, used to be, well, for now still, but in any case, average 3% inflation, meaning $5,000 a year later will be less worth. So let's say I could have bought, so for $5,000 I could have bought, like, for example, let's say expensive book, whatever, right, or expensive wine, whatever, right, bottle of wine. A year later, I will not be able to buy the same wine. Why? Because that it will, the bottle of wine will increase their percentage of price percentage will increase in 3%, right? That is inflation, so the price increase technically, and that's where you will lose that money. So why? How? This is like $5,000 a year now, $5,000 like in December, or in January, or like, well, in January and then December next year, or like a year, end of the year, you will not be able to buy it. Why? Because the price will go up. And that's why, because like at the beginning of the year you were able to buy it, but at the end of the year you're not able to buy it. So that's the problem. That's inflation problem. So I know it's quite simple, but for some reason, like, you know, folks do not still consider like investing. I mean, it's risky for like, and things going on all around the world. And just today I'm you know, shooting this video, and it's like, you know, situation in Israel happened, so, or like with Israel and Iran. So yeah, man, I mean, actually investing today, as I was thinking, like I looked at the market and it went all the way down, right, because of the oil price, everything. So it's all connected. So, but like, it's chaotic, it's you know, folks like don't know what to do, like what's going on, hey, yeah, whatever. So it's risky, all the emotions come into play. So, but again, so you gotta consider all the ins and outs and overall perspective, but like keeping it in the inflation perspective, your personal perspective. Obviously there are different tools for specific markets, and like, let's say you live in like specific area, like United States, or like you know, Russia, or like you know, somewhere in Europe, or somewhere in you know, some other spots, you know, China, for example, right? So there are tools that you can partake of, like real estate investing, for example. Let's say like, hey, if stocks, for example, for whatever reason, stocks is risky for you, or bonds, or no, well, bonds is not really risky, but stocks are very risky for you, you might consider doing real estate, right? So real estate is a very well, sort of local thing, depending on how much you grow and where you need a journey. But in a perspective of like 1 or 2 or 3 rentals, like, you know, the more you go up and the more you grow, obviously will be more affected. But in any case, like few more rentals, it's good, you know, to have like rental investment. So let's say in 1 year, or like 1 year you start buying it. So if depending on the situation that you're in, but like let's say I calculated for my situation. Let's say I will be able to pay out 1 rental in 5 years. So that 5 years I started with like you know, like I think 10 grand, or actually no, it was 50 grand, but it will at the end, right now I will approximately calculate it, but it will be maybe somewhere 300, 350, somewhere there. But it's like guesstimate, but it's approximation. So in any case, it's possibility to start with that money and then end up in that money, in that pool, in that perspective. So if stock market is a risky business for you, yeah, obviously there are different tools. So my whole point here is that you got to protect your money from inflation. You got to do it, because otherwise you technically, if you don't do anything, you're like really, it's in with the money perspective, you will lose it. You will definitely lose it. Because why? Because inflation, just pure and simple. It's unfortunate, well, either unfortunately or fortunately, like depending on the perspective that you're looking at and on which side you're on, really. If you're like investor and if you're in the real estate world, technically inflation is kind of your ally, really, in that perspective. Because on that basis, you as a real estate investor, you can say, hey guys, we got, you know, for not my own reasoning, for not my own fault, if you will, being a real estate investor, you go and you increase the price of the rental, and like, hey guys, like, hey, well, it is what it is. Like, taxes are going up or whatever, like, you know, insurance going up, prices going up, so you gotta increase it. So, and that's one of those things. So in that sense, it's not really like, hey, yeah, I'm for it, but it is what it is. It's just the things of life, like, right? So you can't really change that in the sense of like on your personal and that singular level. But obviously governments and, you know, all the you know, folks that are in power, they definitely can obviously do some changes or whatever, but it is what it is right now. So that's the second topic. Third one, and yeah, obviously I want to keep it short, so I don't want to go overzealous on that, but that's one of those two things, you know, timing the market and timing the market is a very interesting concept, because definitely two things separate, obviously. So timing the market is when you're trying to like, hey, this is a common questions that I like. Most of the common question that I get from my friends of mine is like, hey man, I'm gonna do this, I'm gonna wait it out, I'm gonna answer. And somehow they wait and nothing happens, and market goes on or go down. Or if it goes down, oh man, it's like, man, everything's go down, man, it's the wrong time, man, it collapsed, everything. So it's quite funny, like when folks talk about timing the market, when they say, oh, it goes up, and they say, oh man, it's going way up, like, man, it's a wrong time to buy, and then when they say, hey, it's market is crashing, oh man, it's recession, that's it, man, that's it, we're going down, the economy is going down, we're not going to invest or anything like that. So there's always a reason not to invest, so for miraculous reasons. So, and people don't invest, but there are different those schools of thoughts and things like that. But Smart Investor is Intelligent Investor, very nice book to that addressing that really very nicely. So check that out. So like and subscribe down below as well. So, but if you like that interest, so check that book out, Intelligent Investor. That will give you a perspective of on those two questions and how they address them. But in general perspective, that's basically fear, and that's some people don't just accept, they don't want to do that, they don't know it, they're not like, it's fear of the unknown. That's one of those things. So being in the market for a little bit now, I definitely say, yeah, there are rides. There are sometimes like in recent days with the tariffs and Trump tariffs and things like that, that's been happening. That's been a ride all the way down. So, but in that case, it came back. So, and that's when I actually posted, I think, a video. You can check it out on my channel as well. So when they just posted it, and it's like, oh my god, this is a very nice time to buy. So, and unfortunately I didn't have money. My money were in the market, so I wasn't able to buy. So, and then somebody like, yeah, my friends like, oh my god, Dimitri, like, yo, you could, like, yeah, you should have like waited out. But same folks said, oh my god, I sold, man, I don't know, man, I sold it. And exactly when they sold it, obviously, like few days later, or like maybe a week or two later, it went all the way back. So, well, almost all the way back. So it's like, if you're like right now, I think it's almost all the way back. So that we lost. So see the logic here. So they like, oh yeah, you should have that, you should have done that and this and that, but they never went in, and they actually lost on all that perspective. So meaning that there are, like, if you invest, obviously, like, it's money, man. You gotta, like, some of the thoughts, some of the, like, it's really in there. But if you wait out, you build that, waiting, and then do not panic mode kind of thing. So thankfully I was able to do that. So, and do not, like, I was really, like, it was tough situation sometimes, like, oh my god, man, I'm gonna say sometimes it was like, oh my god. And thankfully I have folks that, like, hey, don't do it, don't. It's a long-term perspective. Remember the long-term perspective. So, and I was trying to, like, encourage myself, and I advise you too. So sometimes when that happened, like, hey, consider things and what's going on in the market. If it's like, some type of timey, temporary matter, like, you might as well just wait it out instead of, like, doing some preemptive strikes and sell things. So in general perspective, that's really what, like, that's what's going on, right? Obviously, like, some of the thoughts, but still think about it, research about it. Obviously, do not invest in some shady companies or whatever, like they just came out, or nothing doesn't make sense, business model doesn't make sense. Obviously, you got to do your homework. If you don't know how to do a homework or anything like that, ask financial advisors, ask folks that are in the market every day, like, do a check with financial advisors and things like that. So how to invest, the strategy and all that. So I do highly encourage you to do that. So, because if you don't know anything, so you gotta do a search before and homework before and study before you go and invest. But you got a situation like, hey, you gotta invest, so you gotta learn how to invest. And this is the video, at least starting you there in that direction, and consider the thoughts, consider the way, and start doing the going and moving in that direction. So like and subscribe down below again to learn more, so in that type of perspective. So yeah, that's one of the things. I got few more. So, like, building the wealth, not just earning money, right? So that's another thought. So financial freedom, right? So that brings you, obviously, discipline brings you financial freedom, and that's very, very interesting dynamic there. Because when you discipline yourself to do this is, hey, one thing myself, well, let's say you're in the mission, right? So consider that, like, hey, if you are in the mission, consider yourself like, hey, I want to bring myself and my family financial freedom that they deserve, that they want, that they should have, right? It was like, stop doing that crazy stuff. So we're gonna do this properly and do this in a good way. So, and proper way. So, and then you become to like, oh, you know what? Hey, I got some money, like, something happened, like, like for a cooler or whatever, like, AC broke down. Like, hey man, we can fix it on Snap, right? So, and it's not like it's just the point, like, hey, you have enough financial freedom not to be in a place like, hey, you know what, oh man, I'm gonna choose between this and that, or do this and that. No, we can do this and that because we have financial freedom, we can do it, and this is where to go. So yeah, so, and reaching life goals, opportunity cost for not investing. That's an, oh man, that's such a lot of thoughts, man. I think I'm gonna do a second part video on this. So in any case, you have to start somewhere. So that's my ending thought and practical ending that I wanted to leave with you. Start somewhere. If you're in the study mode, you don't know squat, subscribe down below, like and subscribe. So for more videos, you gotta have content, so you gotta start somewhere, guys. So start somewhere. You will know, you will learn, you absorb it. When you absorb it, it marinates there, like you do, especially if you don't forget and you keep it learning, keep going. That's when you build discipline, that's when you build understanding, and that's how you end up in the position of financial freedom and where you want to go. So it's a discipline, it's an understanding, it's a learning and keeping it, you know, keep it at it, right? So it's keeping at it. So obviously, you know, obviously free to go to do whatever you want, but up to you, right? Up to you. So, and yeah, so that's pretty much, yeah. So start somewhere. If you're learning, keep learning and continue to learn, but you got to do it. So, and that's the reason, well, like I'm trying to answer this question, why to invest and why to invest. So, and the reason for it is because if you don't do it, you will lag behind. Why? Because of all the topics that we discussed just now. So invest, be a good steward, you know, and discipline yourself, and you know, go in that direction. So hope you guys enjoyed this video. Thank you guys again. Like or subscribe down below. Yeah, go guys, enjoy this. So let me know if you in comments below what you guys think about it, and yeah, see you guys in the next one. Bye bye.